Right. While I love TradingView, it's still got a number of areas where it can definitely improve, and that is one of the video recording suite. I recorded um, an analysis, a comprehensive analysis on oil, and I forgot to switch back from private to public. And once you've published it, you can't switch back. So I want to do a analysis on gold, but we'll rerun the oil first of all. So I'm going to do an experiment. So I'm going to switch over to this analysis over here and just let it play, and then I'll come back and do a live recording of oil. So if we move over to here, presumably I can just press play, and this is going to give us the oil analysis. So get your popcorn out. Here we go. Okay, so we'll flip back to gold, and what we're seeing here is essentially we've got this is analysis I drew yesterday at FX Street. Bears remain keen on that 1825. So that can be found in the news section. You can follow me at FX Street. I write there on a daily basis, every hour, actionable news. And once a week, I do an analysis in the analysis section for gold. It's been a long running commentary on gold, calling it from up top to come down low. It's a 1,000 pip box that we've been penetrating through for the month of February, and we've got a target of 1825 on the downside. And we're very much on the backside of that bullish trend, so this should continue lower. There's no reason why it can't. I was talking about yesterday how we've got a fresh batch of shorts in the market. So following the US CPI data, then we had US retail sales yesterday. So we've come up from the lows of yesterday, and we're coming back down, as I've indicated that we would, for a target of 1825. So we've, as I said yesterday, coming down, we're coming back up. So we've come back up, and we're looking to short into the target. So bringing it up to, let's see if we can come up here and come on to this chart. So this is the same, this is gold again. We're just on the hourly chart now. We flipped from the 4 hour to the hourly. So we've got, as you can see, resistance here. We've done a 38.2 correction of that hourly bearish impulse induced by the CPI aftermath, hawks in the market, Federal Reserve hawks, and we've subsequently started to consolidate down here. A lot of nonsense around the retail sales. Typically, we've come up into that length, but the overriding fundamentals are starting to kick in again. So the dollar is predominantly bullish. What is the dollar doing today? It's probably up around, so it's still in that upper quarter of the 103 level. So we're ducked below 103.80, which is sort of a line in the sand, and we're holding above 50, 61.8 retracement. So likely to move up and up and up for a target in the 104.50. So that plays well into the bearish gold thesis. And if we come back to gold, if I can find that, here we are. So this is one to watch. We've got this geometrical shape turning up as well. So we're looking for an imminent breakout one way or the other, and we're biased to the downside. In terms of the live market in New York then, so we've had higher lows, right? So this is this geometrical shape. We've had a pump up, could be a stop hunt scenario here. We've come right back inside, breaking below there. So this is potentially a resistance, a high of the day scenario for New York. We've got this W formation, pump up, pull back into support. A break of their lower would indicate that we're coming down and down. Whereas if this pullback were to decelerate and start turning bid at the neckline of the W, which is somewhere in there, then we'll be looking for a move up. So again, pretty consolidative stuff so far. I mean, all I can say really here is there's not much to do until we've seen a break below 35 on the downside. Got a lot of volume in here that could well be supportive, trying to short this break of inside structure. So the price is on the backside of the US sessions impulse, pump up, whatever you want to call it. We've got the low in and around where I've marked it there, 38, 70, 90. That's the sort of support that we want to break through, that looks like we're doing at the moment. Getting a bearish engulfment pin scenario. So there is the prospect here of a short, might be a little bit premature. Again, a lot of support in here, but it needs to break all of this to come lower. So, I mean, it could be a scenario of a short with a lengthy stop and trailing it as we break through the volumes. But you might just be better holding out, waiting for the highs to be locked in. So a break through the volumes, a retest back up, and then the explosion would come when it moves out of this geometrical pattern, this symmetrical triangle, whatever you want to call it. So I just hold fire would be probably the best bet at this point. Okay, I'll set an alarm on here, close below the 50% retracement around the 61.8 as well. I think that could be interesting. So we've got this W formation on the 15-minute. So we'll be looking for a break of that, a retest up to come down. Okay, so that's that. Now I'm going to look at some of the Forex. Good luck out there.